Hi everybody, Julie Sharamito here with JS Mortgages with the Mortgage Advisors for part 3 of what I'm calling your psychology series. So we've talked about the psychology of our fear and anxiety when we see stuff posted in the media about future increases to interest rates. We've talked about the psychology behind inflation and what the Bank of Canada is really trying to do here and how that cycle works. And next, I want to talk about the psychology of actually having your mortgage payment go up. And even anticipating that can be anxious or anxiety causing, I guess. When we are looking at an increase of $100 or $200 a month in our mortgage payment, the reality is, as a nation, we have about 300 billion more under our net worth buckets now, not evenly distributed, than before the pandemic, because we had nothing to spend our money on. So most households, and I'm not going to say all, because definitely there are some that are impacted, have been impacted quite negatively and just don't have those buffers. But as a nation, we have a large quantity of money that is household savings that have increased. We have that money to pay towards those higher costs of living. It doesn't feel good when you drive by the gas pump and it's over $2 a liter. It doesn't feel great when the price of bread has gone up, by $1 or $2 a loaf. But we ultimately need to really look at what we have saved and what we're bringing in, because there's also a large majority of people who are making more money than they were when the interest rates were low when they first arranged that loan. So, psychology topic here. If you are concerned about what the increases are going to do, if you have to pay more for your mortgage in the next 2, 4, 6, 12 months, because we are going through a bit of a storm, and so we need to be prepared for that. Let's look at your budget. Let's look at what your income is. Let's look at what you're spending money on. And I think the breakdown is going to feel a lot less intimidating than when we just think, I can't pay more for my mortgage. I'm already spending X, Y, and Z on all of these other things. There is actually some money to be had there, and we can move stuff around. And for some of us, it's going to mean sacrifices. I have mortgages. I'm in no different of a position. And so I get it. I get it from a human being level. I get it from a consumer level. I get it from a mortgage holder level, but I also get it from a mortgage broker level. So coming at it with a little bit of calm, a little bit of big picture thinking, knowing that in the long run, how things are going to level out, we can weather this storm together. But we just have to kind of get our thinking on straight and maybe reallocate some line items in our budget. If you have any questions, you know where to reach me.